Hi everybody, myself Murugan. In this video, I'll be presenting a very interesting facts and figures along with our opinion about LIC IPO. Just in case if you're planning to invest in LIC, I definitely recommend you watch this complete video, which will give you a fair amount of understanding whether to invest, whether to look for a listing gains, whether to keep LIC from a longer term investment. Let's get in detail. And in this particular video, I'll be talking about the facts and figures which are relevant to take decisions. So I don't go through the general concepts or the history about the concept. So the very first thing is the LIP is the largest ever IPO in India as of 2022 May month. So try to understand the size of money what they're going to collect has never been collected by anybody, any company so far in India. And by the way, it was fully owned by Government of India. So why it matters? Because the Government of India is now under pressure of disinvestment target, and they proposed this idea in the last budget that the Government of India is now liquidating 3.5% of LIC for rupees 20,550 crores. I mean, this 20,550 crores is not getting inside the LIC, rather it is going back to the existing promoter, which is Government of India. So this entire 20,000 crores is not going to be utilized by the company. So the objective of the IPO, we need to know that this money is not raised for the companies for the expansion, rather this money is raised for the Government of India's requirement. Being the owner of company, they are actually liquidating this stake. And the Government of India has a reasonable disinvestment targets. So that indicates that the consistent OFS is expected in the near term. I mean, when they keep coming for liquidating the stake to the public market, and that will put a lot of floats into the market, and that will stop the the scope for the price to go further upward. So that's how I just want to conclude. I'm not trying to conclude anything at this moment because we need to know whether the valuation is attractive or not. How are they performing along with the other players in the industry? So don't be biased at this moment. But by looking at these three factors, one thing I can understand is that the objective of the IPO is just for the sake of Government of India, and LIC is known for doing that. For so long, about last 20-30 years, they work as the investment arm for the government. Let's quickly understand what is the numbers talk about it, whether it is good to invest in LIC or not. And we are quite surprised by looking at the numbers. Look at first try to understand all these numbers are in rupees and in millions. In millions, it is in 10 lakhs. So they are not in crores, they are not in lakhs, they are in 10 lakhs. So keep that in your mind. So in this case, that the net worth of the company, it shows that they're close to 815 crores as of 2019. LIC net worth in their books, it is only 815 crores. And in the month of March 2020, it is stated as 854 crores. And later it has become 6,500 crores. As of December 31 March, 2021, it is around 8,200 crores. And look at the profit after tax, that is also need to be there. So we all think that LIC is a very big company, but the kind of profit what they make after tax doesn't seem to be a very big company, because the reported profits as per their records, which is around, it's around 2,600 crores, 2,700 crores, 2,900 crores. As of December 2021, it's around 1,700 crores. So what surprises is, if you look at the net worth, the drastical jump from 854 crores to 6,500 crores. Even 6,500 crores is a net worth, but the company now collecting value from public, which itself 20,000 crores for 3.5%, which is put the valuation is close to 6 lakh crores. So the net worth in the books are just 6,000 crores, or in the max case, it's around 8,000 crores. I'm not telling you that the net worth should resemble the market cap. That's a different story, but I'll come back to it. But you see, there is a bit of decoration happen. 854 crores have suddenly become 6,500 crores and 8,200 crores. I repeat again, and these numbers sometimes mislead us to feel 82,000 crores. It's not 82,000 crores because all these numbers are millions again. So just in case if you're. And why a lot of people talk about in LIC IPO, because this is a company which is known to majority of Indians, and this is a company was given a luxury of being monopoly till 2000. So this company must be there. It's a household name. Almost every household must be aware of it. Especially the anybody at any income earners must be aware of LIC. And now there are very few competitors, but of course after 2000 a lot of new companies have got into the picture, so we have to study this industry wise as well, so that we can justify whether to stay invested in this company or not. And look at the embedded value, because when it comes to insurance companies, though primarily they were compared based on their embedded value along with their market cap. And if you look at State Bank of India Life and SBI Life and HDFC Life, these guys' embedded value to the market cap is close to 2-3, whereas the if you look at the embedded value of LIC, which is close to a 5 lakh crore, okay. And if you look at the market cap, what they're coming up is around 6 lakh crore. So it is very, very, very attractive. But my question is, how come that 95,000 crore have become suddenly 5 lakh crore? So the bit of decoration has happened, but there is a reason how that has been happened, how that net worth have improved, how that embedded value has been increased. That we can see whether their policies with the participatory policies or non-participatory policies. We will be talking about this in detail. But out of this particular slide is what I'm trying to conclude is, it seems that this company has taken some decorational activity in terms of their books, which makes it a little more appealing for anybody who starts reading it. And especially if you look at the, as of last December 31, 2021, their numbers are quite higher when it comes to prior 2-3 years. So, and they've presented only 3 years, but we didn't have maybe about 5-10 years numbers. If they've presented, this would have been much easier. And being fully owned by government should have taken this efforts to make these numbers very clean, so that this makes the investor should have taken a rational decision. Number one, not much of informations are presented. Ideally 3 years is needed as per SEBI norms, but it's quite disappointing that why not they have presented at least 5 to 10 years of data. That's one. So keep that in your mind. Let's go to the next one. See, this is our thought about LIC, because LIC got close to 40 lakh crore investments in various companies. Okay. So it means like a lot of public would have taken their insurance policies, or a lot of ULIP policies being taken along with life, and they have a wide range of products, of course, and such money getting invested in other companies as well. So LIC got a significant percent of Reliance. LIC got various companies are invested by LIC. So LIC is one of the largest the domestic player who've been very active in investing in various companies. Look at this, 40,000 crores they are managing, and the kind of issue now they are going is 20,000 crores. Okay, 20,000 crores is not a big deal for LIC, in fact, because it's 20,000 crores. They can even invest out of their investment packet. I'm not talking about it. This 3.5%. What I'm talking about is the IPO valuation is 6 lakh crore, because 3.5% is what 20,000 crores. If the company valuation is close to 6 lakh crore, the exact number is 5.87143. So that's the number. The question is, let's assume that 40 lakh crore, if they can get a 0.5% as the management fees, the kind of management fees, generally the mutual funds, you see the expenses ratios or the management fees and other thing. Let's say even if it is 0.5%, okay, 0.5%, then that roughly comes around 20,000 crores. 20,000 crores. So out of 40, see, any returns out of this 40 lakh crore doesn't go to LIC, because that goes to the investors in LIC, right? I've given my money to LIC to make return on investment for my capital. So, any returns what this 40 lakh crore gets doesn't go to LIC, it goes to the policyholder or the investors. But the point is, they may have some commission management fees out of it, no? So that is what I take it as 0.5%. And that roughly around 20,000 crores. Okay, that's roughly around 20,000 crores. The very interesting aspect is, if they make 20,000 crores and the company valuation is 6 lakh crore, the company valuation is 6 lakh crore, the price to earning comparison close to what? Because the earnings ability is close to 20,000 crores, and that 6 lakh crore what they actually make as a valuation. So it's around 30 PE, and even 30 PE is very high. 30 PE is even very high. If you look at any PSUs getting traded in India, and PSUs like before that, even Coal India 10 years before, they have adequate cash. If the government were in need of money, they liquidated, all their money went on to Coal India, the government of India. And Coal India was one such company where a lot of talk, a lot of people investing, a lot of retail's been pulled towards market because of Coal India. But very surprising, Coal India was never made a big capital gains for the investors. So the investors, the capital gains were not much from the Coal India. I'm talking about last 12, 13 years out of. So LIC can even become next Coal India, but I don't want to justify anything at this moment. Let's actually get in detail. Remember, this 20,000 crore is surprising here. And if you look at this numbers, what they have in net profit after tax is not even 1,700 crores or 2,900 crores. Why it is? Because LIC got a habit. This is what quite surprising. LIC got a habit of 95% of their profit goes back to their policyholder, because the policyholder is what the true owner of the company is, what the LIC, the thought is. It means if a LIC makes 100 rupees of profit, 95 goes back to the policyholder by way of giving them a discount in the upcoming renewal discount. Lot of reasons for how the existing policyholders are getting rewarded. The only 5 rupees goes to the true owner, which is the government of India. It means, although it is a 100 rupees making company, real money what goes to the government of India as the owner of the company is only 5 rupees, which is peanuts. Whereas the government of India is fully owning the company, but who is enjoying the profit is the customer itself. Am I right? So the customer itself getting fully benefited. So the real margin out of the business is close to 5%, not the 100 rupees. So this is what we wish to highlight it. It means, but they've made a big change, because now they are coming into the insurance policies along with the participatory policies, non-participatory policies, and they were targeting close to 70% as a participatory policies and 30% as a non-participatory policy. Before this IPO, before this period, before till date, they are having a 100% participatory policies, and by which, if any policies, anybody taking a policy from LIC, they are entitled to get the 95% of the profits. Okay, that pool will be distributed among the policy holders. But now they are trying to move only 70% as a participatory, remaining 30%. They want to reward the shareholders, because now it is getting offload to the public. So not only public, some institutions, some anchoring investors, they will also question that I'm investing, but I'm not getting money. So as an owner of the company, my return on investment is very important. So if a customers are actually paid for their claims, any profit you make should go back to the owners. I hope you understand. Even if it is 20,000 crores, I now see this as not as an insurance company. I see this as the fund managing company. Even 7,400 crores is what this 37%. I'll talk about this 37% bit later as I explain bit more. But 7,400 versus a 6 lakh crore valuation, definitely not justifying the kind of P ratio multiples. So this is a thought which actually makes us to stay away from this IPO. This is one big reason why something wrong indicating us about IPO. Okay, so let me actually go and study about their industry, how their industry is actually performing. If you look at the various records, justifies that this is the CRISIL research, and this is from the company's public disclosures from the LIC itself. So LIC Life recorded the most efficient company metrics, and LIC the third best among the peers. Remember, LIC, needless to be third, LIC was given as a luxury for close to 50 years, 40 years if I'm right. So it's been 65 years they are into operations, and they were monopoly for about close to 20 years. And that is how they got the whole market share, and now they are at the declining stage. So now look at this efficiency. What we are talking about is, if you look at LIC, they are paying huge as a margin. After Max Life, they are paying a lot of commissions, because most of the agents are, the human and individuals. So end of the day, the LIC has to pay a lot of commissions in order to get the business. And their operating expenses is, it's around 8.7%. It's fairly better. But if you look at the total, the total cost to the premium is around 14.2%. Total cost to the premium is close to 2% in the 21. And if you look at SBI, they got a very good efficiency, which is 8.3%. Okay, and if you look at this ICC Prudentials, okay, so what I'm trying to tell you is, in this industry, LIC was monopoly for a long time. After the rest of people being allowed, that after the private players are getting into this, it's quite surprising they are getting tested, and in some cases the LIC is going back to second and third. Only in the case of market share, LIC stands number one. Even in that case, it is marginally, they are declining every year. So that's an alarming stage. Let's move on to the next one. So as far as the kind of cost involved in the total premium collected, LIC is, number three. So number one is SBI Life. Okay. So let's move on to the next one. So if you look at the market share, of course, LIC is number one. LIC owns, as of, if you look at LIC, it owns close to 64%. So if there are hundreds of insurance policies being, in general number, if it is 100 rupees being collected in terms of premium for LIC life insurance, and 64 rupees is generally collected by LIC, rest is what all other private players are actually taking it. But remember, if you look at this 2016, they were having 71%, now they are having 64%. And if you look at SBI life insurance, they were having only 5%, now they are gaining, become 8%. This is clearly telling us that they are actually in the declining stage. Not only that, the reason why we present other countries is because if you look at the number one company and number two company, doesn't have a major difference. If you look at the number one company, it's 8%, and number two company is 7%. Number one company is 21%, number two is 20%, 16%, 15%. If you look at other countries, the number one and number two is having a close competition. But if you look at India, it is 64 and 8. This makes us to feel that LIC is a leader, but they were given this fortune being a monopoly in life insurance space for a so long period. So their consumers were not given with much of choice, so they were able to have the wider market share. But the fact is, they are losing the market share in the recent times. This is also a quite surprising fact. Why to stay away from LIC IPO? This is one more interesting fact. Let me present few more numbers, then you decide. Okay, now the other very interesting aspect make us to invest in any company, because their ability to grow, right? If you look at the premium growth in last, about 15 years, if you look at it, 2007, 8, 9, 10, 11, they were at, the growth rate is close to 17%, the CAGR. But if you look at 2012 till 2014, they are pretty flat. They are not actually growing. The premiums didn't. But 2015 and 16, a bit of growth. And especially 17, 18, 19, 20, 21, you see again a very good growth happened. And 20, 21, 22, the premium growth is, it's still expected to be very high, and a lot of awareness is being created because of COVID. A lot of people are now considering the medical insurance and life insurance seriously. Of course, there is a lot of scope to grow. So there is no doubt about industry. Okay, insurance as an industry, we can definitely recommend people can consider to keep it in the portfolio. But the question is it LIC? That's a question. So we are talking about LIC in this particular video. Although the industry is growing and they have a market share, but they are having a declining in stage. That's not a good sign of a very matured company. And LIC is a company which is with the everybody's emotions. Okay, this is with such a company losing the market share is a quite surprising fact. So we need to understand it. Accordingly, we move forward. And now we know that the industry is growing, but we want to know who is growing it. Look at LIC. in last 10 years, the total premium they collected. So now we are comparing it in last 10 years. Okay, in exactly last 10 years, the total premium what they've taken is only 7.1%, but the majority of the premiums are collected by HDFC and SBI. So they are the number one and two. And even if you look at the new businesses, okay, NBP is the new business performance. Like if anyone renewing their policy, it is the renewal from the the previous year. Whereas if someone is taking the fresh new policy, it is an NBP. Okay, if you look at that, the significant performance is actually there in HDFC and Max Life and SBI. If you look at the Max Life, their expenses is very high, but SBI and HDFC is quite interesting, quite appealing. So these two companies are the private players with, they do have a banking brand, and they are also reaping most of them, the policies. So they are a very big tough times for the LIC. And this number says that LIC didn't do anything in last 10 years. It is FY11 till FY21. Okay, so this clearly tells us, although there was a reasonable growth in the industry, but that growth is getting captured by LIC and HDFC Bank. Okay, and try to understand this, what this factors tells us. Again, SBI is rated as number one. SBI is rated as number one in this particular metric. Okay, in this persistency ratio, what you get is, if you look at LIC, that there are 79% of their their policy holders able to see 13th month. So this is in months. So there are about 25th month, 37th month, 49th month, and 60 months. I mean, let's say this 59%, what you see 59% in LIC, this 59% in LIC says, out of 100 people taking a policy from LIC, only 59 people are seeing their 60th or 61st month. That shows what? Half of their clients, close to half of the clients, not able to sustain. And this is not a very bad number, I say, because in general, a very less number of people tends to keep up their policy till the last time. But LIC is actually not standing as number one. LIC is, so if anybody is having 61%, 62, 63%, okay, that talks about, even if you look at this 37th month, SBA having 74%, okay, 68%, 61, 54%. This tells me that the quality of customers they're actually having. Okay, because the anybody takes up the insurance policy and renewing it, persistently being with them from a longer term perspective, all of them is actually telling us that this company is actually having not so clear or great records to talk about it. So what is your view about LIC? What makes you to invest or not to invest in LIC IPO? Just put a comments. And if you have any questions about LIC IPO, put a quick comments and let us know. And if anything appeals, then we will also give you another counter video which can make you to think about it. And as of today, it's the first day of the issue. And we know that the anchor investors is fully invested, and a lot of people started subscribing, and a lot of people asking us opinion. So definitely we recommend you to come up with your thoughts about it. Okay, so what is our recommendation is not recommended to include in long-term portfolio, because I don't see this company at a growing stage, rather it is at a declining stage. And when a company is at a declining stage, having higher multiples and underperforming, it's not a great time to be part of LIC at this moment, to keep it from a longer term portfolio. In case if you wish to have insurance, I definitely recommend probably the other company like SBA and HDFC Life. But this is not a video about studying the SBA in detail, but looking at LIC, SBA justifies a lot more. Okay, and they were acquiring market shares, they're having a better operation efficiency, and that's really good. Okay, and nominal listing gains is expected because or probably a muted performance. Not so very exciting performance are expected. Although there is a lot of people talking about it, but the size of public can contribute towards it is quite high. So we don't see much of listing gains. So even if you're planning to invest just for the sake of listing gains, I don't see much of scope. This is our recommendation. This is our opinion. This is our stance about it. But we presented a lot of interesting facts. I hope you know, especially this our opinion and this numbers. Okay, this numbers. If numbers are really justifying it, go for it. Just because the LIC brand, don't go for it. I just want you to think and see whether your money is getting inside the company or not. If at all, if it goes inside the company, whether they are using your company for the betterment or not. Or if at all, if you're acquiring a company by giving away money, does that portion justifies your return on investment expectations or not? So you need to think about it. A lot of people say is LIC, or like, LIC is such a big company, like such a big company having a profit after tax is 2,900 crores. Quite surprising. Yeah, like the profit after tax of the Reliance, TCS, these companies are standing over 40,000 crores, 30,000 crores. They are even, and so this is definitely not justifying the multiples. And the habit of diverting all the profits back to the policyholder may be a very good from the customer centric perspective, definitely not from the promoter perspective. Any company sustains because of three things. Number one, the promoter, the owner should be satisfied, the management, the employee should be satisfied, the customer should be satisfied. But the LIC looks, they are only customer centric and they are not actually the owner centric, and the efficiency ratio is very high, and they are not maintaining their efficiencies well. It shows that even they are making money from customers, but they are not using it effectively. So lot of inefficiencies inside the company, not adapting the proper technology, not reaching out to people. They are not even there in a lot of the aggregators, especially I think, if I'm right, the Policy Bazaars and other places. That shows the kind of the hunger they have in terms of reaping up the business. So from the IPO perspective, we are quite surprising to take a decision that it may not be a good to take or apply for IPO. In case if you are die-hard fan of LIC, you may hard to hear this, but it's a bad choice if you're planning to apply for LIC. That's the our stance by looking at these numbers. If there is anything need to be updated, we will also keep you posted through this channel. So stay subscribed. If you find it interesting, if you know someone is planning to invest in LIC, you can even share this. If you have a question, ask a question in the comment section. We will see how effectively, quickly we can answer all your questions. This video makes sense for about next 4-5 days, right? So make use of it. Keep sharing this video and support us.